Well, hello there, traders. Welcome to TOGS Trading Podcast number 50. Number 50 already, ladies and gentlemen. Where today's session, we're going to talk about from small to large accounts, the psychology of scaling up your trading. So, of course, for all traders, both private and institutional trading, scaling up your trading account, it sounds exciting, but it is one of the biggest psychological traps that traders face because as capital increases, so does internal pressure, the fear of losing more, the expectations of performing better, and the emotional attachment to bigger numbers. So in this episode of TOGS Trading Podcast, we're going to talk about how to unpack how professional traders manage the transition from small to large accounts and why success depends less on your balance size and more on your mindset, your risk discipline, and your process consistency. As always, okay, for this conversation, I'm joined by my trading buddy, Big Ian there in Dublin. Looking good. Billy Ray, how are you doing?
I actually was thinking I looked a bit woolly at the moment. I'm sort of due a haircut for the last 3 weeks and I just haven't got around to doing it.
So you're getting ready to hibernate.
Or Christmas. Depends.
Yeah, Christmas.
Yeah.
It's your big season, isn't it, Santi?
It's a beautiful season. I love Christmas so much. It starts now from the middle of November up till the middle of January. And it's special. It's very special. I've gone out a lot of nights.
Favorite Santi.
Yeah. Yeah. I mean, I don't mind little kids. You get little kids that'll come up to you in the supermarket and go, "Oh, Mister, you Santi or whatever." That's fine. It's the
middle-aged mums.
No, it's not the middle-aged mums. It's actually because they don't tend to go near you at all. But it's either young women, in places who will come over like and sit in your knee or something in the pub and dribble shite for you, basically. I mean, it's not my choice that they would come over. I mean, I've been out for drinks. Actually, I was out in Kyo's with my wife. And then in the middle of it, and then some woman, she went to the bathroom. When she came back, there was some young woman pissed out of her head, sitting on my knee, telling me what she wanted for Christmas. Like, I mean, that's not my thing.
And then our podcast has taken a very different as we get a deeper look into Ian's life.
And groups of young fellas going home can be a little bit dicey as well. Like, oh my God, it's Santa! But I do dress up for Santa as Santa for Halloween occasionally.
Fair enough.
I think that makes sense for me. I eventually had to adapt and accept it.
There you go. So, other than looking woolly, how are you getting on? How have you been doing?
All right. Actually, that was just as we were just talking to you just before we went live there. Monday was a really interesting day because I couldn't focus. Couldn't focus for the life of me. I went in and had some beautiful setups, and even my best setup, which is a mechanical setup, just couldn't pull it together. I lost the grand total of €2. So it was hardly exactly a banner lost or anything like that. So it wasn't. But it was just what I really noticed about it, which made it really interesting, was I could see a lot of the little areas that I'm not brilliant in, but they were amplified, so they were clearer. And I found that really, when I sat down and sort of did my review in the evening, it was really interesting just to see, because I could see a lot of things very clearly where I was dealing with there still is residual fear or whatever excitement or areas where I'm not completely organized as well as I should be. Little things like that were quite illuminating. So I found from that day where I didn't make a loss, and I certainly didn't make any money, but I learned a heck of a lot out of it. And as even yesterday was another interesting day because it took me. I'm terrible for acknowledging that the trend has changed. So if I'm in an uptrend, if we're in an uptrend, perfect, no problem. But when the trend changes even for the day just to short, it takes me a good while to acknowledge in my mind that it has. Now I have a mechanical way of working out. I have one mechanical setup, and if that mechanical setup breaks, which it did yesterday, then I accept that the trend has changed because and then I have to go to shorts. But it's just that I don't acknowledge it early enough, which was just the thing I really sort of I could really see in myself yesterday when I was doing it. So I was trying to catch a knife all morning. Now I tend to be really quite good about not losing money. So I wasn't losing anything. I wasn't making anything, but I wasn't losing anything. And then eventually the mechanical thing switched in, and then I flipped, and then I got 20 points, which is a nice day. 20 points is, for me, it's fine. Yeah, in one trade, and that was basically it. And then this morning I did was out shooting this morning, and
Yeah.
not at animals, at paper targets for all the vegans and tree huggers out there. And before I went out, I did a quick trade that was actually really went quite well. Just saw that we were going off up to a certain level, and just hopped on board. There was no more thinking about it than that, and that worked out quite well this morning. So that was it. That was my
good lad.
That was my week as such.
Good lad. Good lad. Monday was a bit of a strange day anyway. With the well, especially for us in the FX world after the sort of Japanese elections and stuff over the weekend, of internal elections, etc. Yen just got dumped. And then this morning, last night, Royal Bank of New Zealand, they cut rates not by 0.25%, by 0.5%, 50 basis points, which was a bit of a surprise for lots of people. And so kind of basically Kiwi dollar just got dumped. And you could just see this morning as the kind of Europeans came into the FX market, they're like thinking, oh, we weren't expecting that. And so it took a little bit of a while for the European session for it to warm up. Right, it sort of kind of my setup sort of came a bit later in the session because everybody was just scratching their head a bit, thinking, "Wow, we weren't expecting that and stuff." And so whilst I was waiting for that, I even managed to sort of scalp the princely sum of 8 ticks out of the Dow this morning. I was basically setting up another one. This is one of my problems, is that I've got so many platforms that are trading on, and I was setting up the hotkeys on one of my other platforms to be able to, well, yeah, to basically to effectively sort of trade quicker than I expected. So I thought, right, here we go. We'll trade the morning Dow and stuff, and let's see how that is and whatever. Whilst I'm practicing this, and yeah, so it was actually quite nice whilst I was waiting for the FX market to wake up. So yeah, so it's been a good week. It's been a good week. All right. So listen, last week, last week we talked about going all in, and if you should ever go, all in, if what is about going big in your trading. We sort of talked about that, really it's not what you should be doing. All right, okay, you should going big just off impulses never works, and going all in is a foolish endeavor. But at the other end of the spectrum, naturally, people do want to talk about growing their accounts and going from a small account to a large account. And the reality is that in the experience that I've had from working with and coaching traders over many years, is that the reality is that most retail traders are undercapitalized for the for the goals and objectives that they set themselves, and so they have they've almost already kind of like put a great weight on their shoulders before they've even clicked on a trade. So part of it becomes about growing that account, what can be done, how it can be done, or more importantly, how it shouldn't be done, because I've got lots of experiences of chatting with and coaching traders and stuff who've done it the wrong way, and we'll share some of that with you today. But what about yourself, Ian? What are your own thoughts on, let's say, the kind of psychology of scaling up your of your trades, okay, and trying to grow a small account? Where does that come from?
Well, I think in reality, it's the most important topic in trading, position size, effectively, which is scaling up. Because it's at the end of the day, it's not really what you make; it's what you lose that kills you.
Yeah.
So
Yeah.
it's so and I don't think people take it seriously enough. The whole idea of position sizing, and scaling up, and doing it in a method, in an organized fashion. I don't think they do it. I also think as well, a lot of people put pressure on themselves to scale up. Because I'm a big fan of being slow. I think scaling up. I think build skill. Skill is everything. Position it, because money comes after skill. So you can spend 10 years building up your skills, but then that's when that starts to pay off for you, and you will know yourself when it's time to increase your position size. Because what's going to happen is you're going to get to a size where your position, like the perfect position size, is a position size that is big enough that you care about it, but not big enough that it should affect you, how you trade. It shouldn't affect you emotionally. And what happens in my own experience is that you get to a certain level with that. You get so far with that, and then suddenly you start getting bored with that position size. And then you start doing things that you start noticing, that you shouldn't be doing. You might take a little gamble, or you mightn't be quite as keyed in, because the position size has become, it isn't challenging for you enough that you care about it.
Yeah.
So that to me is a big signal that then it's time to start considering moving up to the next level of trading. And I think that should be done uh, incrementally, and it should be done at as slow a pace as is possible for you to do it, because it creates, every time you change your position size, it creates emotion. Whether you put your position size up or you put your position size down, it creates emotion in you. It creates, and that emotion, the primary emotion in trading, I think, is fear. And fear is pervasive, and everybody suffers from fear at some level. I was even, because during the week I was looking, like, I have a Telegram channel, and I trade live in the Telegram channel, and I have one of the entries said, I don't want to sit through pullback. And what that said to me after I sat back and I thought about that is that I was trading too big at that particular moment for that particular setup, as how I felt, because I knew there was going to be a pullback, because the pullback in that area is normal. And pullbacks are healthy. They clear out the weak hands, which I was in this particular instance. They prove the trend on the way up. They do all those nice little things. And I had a higher target, and I should have just simply sat through the pullback and waited for in fact, I should have added on the pullback. But I was in too big already for how I was feeling at that particular moment in time. So I didn't want to sit through the pullback, and so I exited the trade and then watched it, sat in the sidelines and watched it go up. Oversized positions as well, if you get into them, if you move too quickly with increasing your position size, they can trap you very quickly. I think every trader has been in a position where they went in too big, or the position grew too big for them. And what ended up happening to them is that it went down. They ended up being like deer in the headlights, and they weren't able to get out, because they weren't able to take the pain of what they had lost, because the position size was too big. And then consequently, then some cases they got lucky and price went back up for them and they got out. But in most cases, price continues to go down, and they just really hurt themselves. So position size can be a trap for yourself. It's an amplifier of all your mistakes. So it's something you have to increase. There's no reason to be in this game if you're not aiming over time to increase your position size. But it's increasing everything. It amplifies everything. It amplifies the danger. It amplifies your emotions. It amplifies your wins. It amplifies your losses. It's a huge topic. It's probably being underfunded, or which basically means as soon as you're underfunded, all your position sizes are too big. Basically, so there's no so. Yeah, it's something you really that it doesn't get the. I don't think it gets the. I don't think it gets the attention that it deserves. People sit there and they look at charts, but they never look at position size, I think.
Oh, there is that. Or if it does get attention, it's normally for the wrong reasons. I would probably take a step back, and I've talked about it here before, namely that one of the first questions you have to be asking is like, why are you scaling up? What is driving you? And so very often, as we both mentioned earlier, is that there are external factors that are at play that are basically driving the trader to increase their position size. So they ate the job, they ate the life, they ate the relationship, etc. And they're looking to use trading as the escape vehicle from their current situation. And so they've been toiling away for what could be weeks, months, years, maybe. All right, as you say, in acquiring the skills, and suddenly they start to have a bit of streak of success. And I've just seen this so many times, right, in other traders, is that they've been chipping away, building their skills, starting to build consistency, starting to build an equity curve. But of course, those external factors are gnawing away at them, and suddenly they're going from, I don't know, let's in simple for simple language. Your man has been spread betting at, I don't know, he's been spread betting at £3 a point and stuff and what have you, and just chipping away whilst he learns the skills. And then suddenly overnight jumps to trying to sort of trade at like, £20 a point, £30 a point, £40 a point. Okay, just absolutely huge, supersized positions that he's not ready for, not in any way prepared for. And, invariably within a few trades, just basically blows up all of that progress that they've made over the last sort of few weeks, months, years, etc. For some of them, that's enough to basically be emotional enough and experienced for them that that's it. They basically they think that they're just not cut out for trading, and they drift away from it. Whereas in fact, actually, it was just they were just being a bit of an idiot beforehand and not really sort of planning and allowing those external factors to basically overwhelm their kind of rational decision making. As you said earlier, it's all about fear. Even greed is really just the fear of
Mm.
missing out, isn't it, and stuff and what have you. And so people get overwhelmed by it and they start making poor decisions, and those poor decisions come back to haunt them. And I've just seen so many examples, like literally so many examples of people who have just started to turn the corner, started to do well, start to increase equity size, etc. Correct the trajectory of their equity curve, and then they go a bit Colonel Kurtz and go a bit mad, and suddenly, it just they end up blowing up and stuff, and it's sad to see. It's sad to see and stuff, but it's that case of once they go down that route, it rarely ends well. It is something. Scaling up your trading, you did make a good point there. Is that you will know when you're ready to start scaling up. You will know when you are ready to start scaling up correctly, as in you're coming from the right place to do it, rather than, as I said, those external factors hammering you, that kind of external voice telling you, I want to buy a Porsche, I want to buy a speedboat, or I want a new life, etc. Because that invariably, that kind of normally contributes to your downfall. Have you
Mm.
seen or heard of experiences like that, Ian?
Well, I mean, I've lived through them myself, particularly when I started off
Oh,
first.
honestly,
Because
yeah.
one of the things that I found, because one of the things when you start off is you don't know what you don't know. You don't know how weak and vulnerable you are in the market, and you just know that the way to make money is through position size. That's literally it. It's about buying the right stock and hoping that stock goes up, and then having a lot of that stock. And so when I started off first, my position sizes were ginormous for what I was for what I was trying to do. And so consequently I had some great wins. I had some super, super wins. And in fact, one of my early wins kept me in trading for a year. I earned enough off that early win to be able to ride out the rest of the year, basically. But a lot of my position sizes were way too big, way too big. And it was ignorance. I simply didn't realize that's what that's what I was doing, that I was betting too big, because I didn't know what the correct bet size was. And I was just trying to make was trying to make money, and then eventually it started to cotton on as I started to lose money again. That maybe I should learn something a little bit more about trading before I put on these big €10,000 bets on stuff. Um, so I struggled with it for quite a while, and I still, in some ways, I'd say I almost still struggle with it now, because position size and scaling up are what creates emotions in you. So anytime that I would do something that is incongruent with what my aims are, which is basically, say, not holding to target, for instance, that's something I tend to, if I was going to say it a weakness, that's a weakness I have quite often. Um, that can often just come down to I had the wrong position size on, for how I was dealing with that day or whatever it was, and and it creates this. It ends up creating a fear, and a lot of the fear is subconscious. You don't even realize that you're experiencing it, and it takes a long time for you to hunt it down and to find it and to be able to correct it. And it always nearly. And the fastest way that you can correct something like that is through, or to affect something like that, is through simple position size. Like often I thought I was trading. I often thought as well when I started off, I was trading even later in the game. I thought I was trading too small, but I was often just trading too big.
Yeah.
Because the thing is, you have to work perfectly in trading. Working perfectly is more important than anything else in trading, as far as I'm concerned, because you have to get your process has to be nailed down, because that's the only way that you're ever going to make money, and your position size can screw with you so much. It's very hard to hold a trade. You can be right if you have a position size, if you have a trade on, and you can be right on the entry,
Yeah.
and you can be right on the target, and it can do what more or less what you expect, but a little jolt on the way up because you're over prescribed in the you're too much on. You end up being wrong. You end up losing. At the end of the day, or not holding to target, or not doing what you should possibly do. And I think it's because size is the boss of your emotions
Yeah.
at the
Yeah.
end of the day.
Hugely. Hugely.
And yeah,
Hugely.
so it's
Uh,
it's yeah. Sorry, that's you.
I was just saying, I would actually, I would probably challenge you on your language there in terms of you need to be working perfectly, but that's very much a personal thing as well. I have a real perfectionist streak, and so I kind of try to avoid any kind of use of language of perfect or perfection because I don't think there is any in trading. I'd be saying it's about trading effectively. You have to work effectively based upon who you are and effectively how you define that would be very different for different people and stuff. But the let's say the perfectionist who is caged on a leash within me and stuff that I have to work through and deal with. Um, yeah, I would be yeah, my choice of language would be different than yours on that particular instance. But I get what you mean. I get
Mm,
the gist of your of what you're saying and stuff in terms of your position sizing has to be correct. It has to be effective based upon who you are. In a size that is enough for you to be engaged with the trade, but equally not large enough that you are having an emotional meltdown and stuff, which I have seen on trading floors
mm,
when people have just traded too far too big a position, and we're watching them melt down is quite it's quite something. It's quite a spectator sport, but that's a different story for a different day, I think.
mm, mm. I think it's also just because my idea of perfection is like, what does it mean? It means to me just not breaking your own rules and doing what you're supposed to do when you're supposed to do it.
Yeah,
So it's not because if you were too perfect in trading, if everything has to be exactly right, if everything has to be, all your indicators have to be in alignment and all this kind of stuff, and you see this an awful lot as well with newer traders, where they have their 7 indicators on their screen, and everything has to be in alignment, and then or whatever. There's a search for safety in perfectionism, and I don't think that's not something you're going to come
yeah,
across. That's not something you're going to get in trading. Is you're not going to get that.
no, I know.
You're not going to get that safety because there is nothing safe in trading. It's you can make it as safe as you possibly can, but there is always
There is always uncertainty.
there's always
Yeah,
uncertainty and there's always risk, and it's a thing that you just simply have to accept. So for me, perfectionism is probably a little bit lower graded, where it's just doing what you're supposed to do when you're supposed to do it, and it's all too easy to break your rules and to do something that you shouldn't be doing.
yeah,
Um, One of the things during the week, which I was thinking about it, is that position size is basically like it's been Trading Places was basically a film about position size. If you want to look at it in that terms, if those boys had proportionally put on their trade with some idea of something, they wouldn't have lost all their money. Um, it's in a lot of like 19th century or 18th century romantic novels. The sort of Emily Bronte type stuff, where
oh yeah,
daddy puts a bet on the gambling some night and loses the farm. It's he is betting with the wrong position size.
yeah.
Um,
There you go.
so
I never thought you'd get Bronte's one of the Bronte sisters into our trading podcast. Well done there, Ian. That's
that's no problem. Well,
fair
we should
play.
really start playing a game where you have to forget the most obscure topic that has absolutely nothing to do with. with I can see some hand sanitizer as I look at. Maybe I should come up with some reason to bring that
Absolutely.
into a thing. Yeah, so I suppose really the question is like, if you feel it's time to change your position size, how do you go about it? And I think the first thing is that you have to look at whatever you're trading and see if there's enough liquidity.
Yeah.
Because there are
Yeah.
some things like oil isn't as liquid as DES, CL isn't as liquid as DES, and so sometimes when you go into CL, it's relatively like I've had a lot of slippage in CL at times when I was working with the actual contracts. Um, so that's what the first thing I would look at is something liquid enough for you to be take. You see all these penny stocks and stuff like that, and I've seen them a few times with people, particularly scammers, talking about them.
Yeah.
And they see the price, you see the price goes up and it goes up by a huge amount. But the very tippy toppy of that, there's 36 shares were traded. There isn't enough liquidity there for
Yeah.
anybody to do anything with. It's just because they've hit that price doesn't mean anything if you're trying to get rid of them. As you had mentioned before, which is why are you doing it? Why are you changing your position size? Is there something external pushing you? Do you want the cash? Do you want life change? What else? All that stuff. Um, are you looking at other traders? That's one of the things I always thought as well. Are you looking at other traders and traders tell more lies than fishermen, and that's been my experience of them. And I've been both, so I would have good experience of that. So I think there's a lot of horseshit talked about trading and about profits, and especially when you go and you look at the internet and you look at YouTube and you see all these guys, the Lambo guys, even people you work with sometimes, or whatever, or what, you don't really know what they're actually making unless you can see there. There's only two ways you could do with it. One is that if you're trading with them live, you have a good idea because you know where they went in and what they did. But there's an awful lot of I think lies told in trading, so you don't know how other people are doing. So don't feel external pressure from thinking that somebody else is making a huge amount of money. It's you don't know. You simply don't
Yeah.
know unless they open their account up to you.
Well,
And
yeah. Also, that just comes back to being a comparison as the thief of joy, and comparing yourself
mm,
to other traders. That is just another external factor that is basically contributing to you losing your mind and start to chase scale.
mm,
But
mm,
the thing is, the people aren't really ready for it because they don't really understand the hidden pressures of starting to scale up your accounts. Okay, and once you start jumping in, whether it be both account size and your position size, that often triggers some very deep subconscious fears. All right, it starts bringing that all up to the surface.
mm.
Those I can't afford to lose now that I'm trading at X size, etc.
Yeah.
And then that very often leads to traders starting to over control the outcomes of their trades. Right. So they basically start snatching at any little bit of profit, start tightening stops or easing stops, okay, or they start skipping valid setups, start skipping every
Mm,
setup has to be perfect because they're now trading at a size that basically it triggers all that kind of deeper fears, etc. And so suddenly the the their equity curve, the P&L starts to basically get diminished anyway, and because it's now getting diminished at a greater let's say dollar size, that starts to become like almost like a reinforcing loop, okay, to negative feedback loop. And in fact, what happens is you start seeing that the trader's growth it stalls, all right, it stalls because their identity hasn't caught up with their balance size, and
mm,
that takes time. All right, that takes time for your identity to catch up with your balance size, and I'm sorry I can't give you a like a hard and fast rule on that. It will that will take time for everybody, and it will be different for everybody based on a whole set of individual circumstances, etc. But yeah, you very often see that growth stalls because the traders start over controlling the output, trying to over control the outcomes, precisely because bigger size starts bringing out sort of deeper underlying fears, or just as you said yourself, it amplifies some of those challenges and fears that we already have and stuff. And even I had this experience myself, is that there are kind of levels or size levels that don't make any sense, but they challenge you or block you. One of my levels was, I when I sat and reflected upon it, was that I was kind of risking the same in a week as I had been earning in a year, as when I was like a young junior Air Force officer. And so it was just, it was not it's just recency bias. Well, it's a version of recency bias, in terms of, if that was a number that I had in my head that basically had no real relevance to markets or to trading, or the way I trade, but my brain had a bias locked to that particular amount and stuff, and you have to reflect upon that, you have to review it, and you have to work your way through it, and there will be numbers and levels that just basically throw you a curveball, and sometimes you'll understand why, other times you might not, but you just have to face up to it and just start to work through it. And we'll come on to that in a minute, because I think part of it is about, you have to start to build a mindset that is ready for scaling kind of before you start doing scaling. It's not enough just to get your trading skills. You have to start basically working on yourself internally to get to be comfortable with this, I think, don't you?
Yeah, just one of the things you were saying there, because one of the things I find when I mentor other students, and even in myself, is sometimes if there is a figure of cash that actually means something to you,
Yeah.
it's like naming your the fish that you're going to eat for dinner. You might get attached to it, and that's so. If you were, I don't know, say €200, right? That's a nice dinner out and a nice night out with your wife someplace. And so if that takes on that significance to you, then it stops being something that it stops you being able to lose that money, because now you have not just lost, the figures on your screen have changed. You have lost a real life experience, and I think that's a real thing you have to look for, because we all have different relation. Money is different related to, as an Irish person, what I find an awful lot of time. Or somebody who likes wine, like I'll go into a shop sometimes and see a bottle of wine and it'd be €100, and I go, "That's cheap." I get pulling them all off the counter, thinking this is the deal of the century, because my idea on wine and the relationship of money to wine is completely different than it would be to buying petrol for my car, tires for my car. I go down and they go, "That's €100 for the tire on your car." You're like, "What? That's so expensive." So it's just the relation to it. Also, it's what type of life do you want? I mean, I was thinking about yesterday. I was trading. I had put on a trade yesterday. I have to manage. I have to be there to manage the trade for the first few minutes of it until it gets to a point where I can put in my break-even stop loss, and then I put in my target, and there's nothing else to do. So I went away and hung up some clothes that I took out of the washing machine, and and that's a far nicer way to live than being glued to the screen and looking at every single tick,
Yeah.
and having your heart in your mouth all the time. That's not it, because you can only do that for a certain length of time in your life. You can't live with that sort of extreme emotion. You're just not designed to do it. One of the things I think that people also have to think about when you are changing, when you do start changing, is market conditions, because everybody has certain market conditions that suit them better than other types. And I think that you can, like, I love uptrends. I love bad uptrends. I love uptrends that sort of go up a little bit, come back a little bit, go up a little bit, come back a little bit. I don't like strong trends, but I like uptrends that are not particularly strong. And if you pick one of those, when you see those market conditions, if you are due to start increasing your position size, that's a good time to do it, because if the conditions are, the ones I don't work that well in downtrends as well as I work in uptrends. I may as well, if I have to do that job of increasing my position size, I might as well wait for the next uptrend. And that gives me, because every time you change, there's turbulence. There's no way, like, from my personal thing, but every time I change my position size upward, there's turbulence. There's some sort of, I lose my connection to the market is the first thing that goes. And I'm vulnerable to making mistakes. So what I'd like to do is try and wait for the best, give myself the best chance. Because if I get through 4, 5, 10 trades with a new position size, and those trades have been largely successful, then it's much easier, to do it the 11th time or the 12th time, and to start to reestablish your connection with the market and start operating as normal and start operating like it's an average Wednesday afternoon. So I find that that's important. And one of the things which I've also seen over the years is that when you would change position size, is that now you'd have to also wait. You would do things subtly differently, and whether that is not the best thing that you could possibly be doing, because when you a lot of the time what I find with traders and when I'm mentoring them is that they're fine when they're on a sim account or a very low level because they know what to do. They operate perfectly. There's no, there's only a certain amount of tweaking that might have to be done with them or whatever. But then when they change position size, they don't feel, and they might not consciously do it, but they might unconsciously or subconsciously feel and often consciously feel that they need to change what they're doing. That they can't operate in the same way because it's too risky or it's been working for them. But so they go through this process of doing these subtle little changes. They're exiting a little bit early, or they're entering a little bit later, or doing whatever, and it screws them. Just small, subtle little changes. So so that's basically, I think, the big takeaway from that is that there's always going to be turbulence. Just give yourself the best chance and try and do everything exactly the same way as you've done it before, and that's the best chance that you're going to get. To make a success of changing your position size, I think.
Yeah, and what you'll find is, I'm using the word professionals, but people who've been working at this and growing, um, you scale very, very gradually, much, much slower, much smaller than you think you're going to, because you link your size increases to measurable process consistency. All right, so all the good numbers, because scaling starts internally. All right, it's about your emotional comfort with risk defines your external capacity to handle it. And so I mean, it shouldn't really. He says it shouldn't really matter about size, but you should be treating each trade as a probability event, not as a performance test of your self-worth, which once you start scaling up, and if you're not ready for it, it will turn into a performance test of your self-worth. And that is not an emotional roller coaster that you really want to be on. So part of this, then, the way you deal with that and the way you help yourself is about having the right structure in place before you start growing account size. So you should have a kind of some rules or guidelines that you're only going to increase position size after a sustained period of consistency and success. So it might be, someone might be 20 trades, 50, 100, 200. You yourself will know. And then also you need to have very clear thresholds for adding size. Okay. And that can differ and stuff and what have you. But it should be very clear thresholds, and also your scaling. It should be mechanical, all right? You should be doing it on a mechanical basis, not an emotional basis, as in, oh, I feel good today. Do you know what? I'm gonna lift my bid and stuff and what have you, in terms of my size and what have you. It should be mechanical. It should be easy, okay, rather than just emotional, okay. And so putting a simple mechanical scaling plan in place is what I think. Those are a few things that you should be doing to basically to prep yourself for scaling, and then also helping you manage that scaling. Um, because then it comes on to, I'd say, the post trade, the kind of the review, reflecting, resetting, if you have to. I'll be saying, you should be keeping a journal of your trades anyway, but after every size increase, you want to be just reflecting upon it. Was it fear or greed that shifted your behavior? Was it, what was the kind of dominant emotion, that you were sensing during that trade when you should have increased size? And if it's leading to you, if you're in a place where your emotion is leading your execution, you've lost you've lost rational logic. You've lost your head. All right, and your size is being led by emotion. Well, then you need to stop. You just need to stop. You basically need to reduce your size, okay? Because ultimately it's not about bigger trades. It's about just better trades repeated longer. And just staying the course of it. And so that kind of review and reflection upon how you're getting on with increasing size is unbelievably important, even more so than normal, because you just need to understand what's going on with you, and as we've said quite a bit through here, there will be particular prices or levels or times or experiences that just throw you a curveball. And as I said, you don't want to get to a point where it's emotion leading your execution. You want to basically be in control of your execution, and doing it in a way that is mechanical rather than emotional, because that just doesn't end well at all, does it?
No, no. The other thing I would just to say is that you don't, once you change your position size, there's nothing to say you can't go backwards. If it just proves too much for you, you can always go back,
Yeah.
and sometimes I found that I've had to do that several times, where to increase the position size, and then find that it was just affecting me too much. I was just not operating properly at that sort of thing. And then I start doing things slightly differently, and that starts to affect my profit and loss, and so on and so forth. And I wasn't able to take the trades that I wanted to take. So, just roll it back, and then give it another try in a week if you want to, or when you feel that it's time for you to try it again. There's nothing, you're the boss of your trading unless you're working in a hedge fund or you're working in a prop firm. You're the boss of your trading. So this is one area in your life that you control perfectly, and that the one thing you control perfectly in trading is position size. So you can build it up if you feel it's the right thing to do, and your account allows you to do it and all that kind of stuff. But you can also just go backwards. There's nobody. It's about you getting, because it's not about it's about the quality of your trades as much as it is about the size of your trades, because you have to produce these quality trades, and that's what you're really there to do. And position size will come. So you're going to eventually, at some stage, you're going to want to increase your position size. And it's not infinite either. I know an awful lot of professional traders at the same position size for 20 years. They trade, they get to a certain area where they're comfortable and they don't feel the need to move on from that. They're working a few hours a day. They have a nice life. It's not that stressful for them, and they're just happy out. They go in and they do their little bit of work, and they make their ample wage, and off they go. So, but what they all have to do, what everybody has to do, is enter, manage, and finish out quality trades, and that's your main job. And then, as you do that, your confidence grows. Everything like that's going to change naturally. And the other thing you just mentioned, self-worth, and self-worth is an interesting topic. I always think in trading, because that is an external thing that pushes people, particularly younger men, to increase position size too early, because they're trying to fix an internal feeling by doing something in the external world. They're looking for the world to prove, because everybody who goes into trading, I think at some stage, especially retail trading, assumes that they will be the one. That they are the special person who's going to be the person who's going to make
Yep.
who's going to be the one who's going to make it in trading, and the Lamborghinis and helicopters and whatever else. And that's a self-worth question. At the end of the day, if they're going into that to try and fix an internal need through external means, and like, people aren't aware of it either. The way that I explain it when I'm dealing with people is that if you are a man and you have to talk to a significantly more attractive girl than you are in a social situation, you might feel nervous. And the reason that you feel nervous is because you have looked at your own self-worth, and you have deemed that your self-worth is less than the lady's self-worth, than what the lady is worth. So that creates anxiety in the person, and you've made a self-worth judgment of yourself. So it is a thing in trading. It will affect your trading. It probably has affected the reason why you got into trading in the first place. So it's just something to be aware of. It's an interesting topic, I think.
Yeah, and I think there might be a space for a future session on self, as in self-awareness, self-belief, self-confidence, self-worth, because all of these elements that don't really get anywhere near enough attention in trading, but are unbelievably important, unbelievably important.
But that's one of the things I would say about a lot of because I was talking to another professional trader about this during the week, and that all of the best books on trading are not about trading.
Yep. Totally.
And it's those things, like those self-worth questions, those behavioral questions, all that kind of stuff is like, they're huge, big things, and they're just not covered in the trading literature. And it's the stuff that really makes the difference at the end of the day.
You're absolutely right. I was made aware of it by a client who came to my old office, and they were the ones that pointed out that my kind of library on the wall, there was more kind of self-development books than trading books on my library, and it kind of struck home to me, is that because most of this is about managing self and improving self and stuff. But as I said, I think that's a podcast. That's an episode all of its own. So listen, we should probably look to draw up, because to be fair, we could talk about this one once again all afternoon. But what we want to do is just to get across the message that yes, you should be scaling up, but B, you should be doing it in a kind of sensible, logical, and slow manner, rather than just being knee-jerk impulsive moves into it off the back of other kind of external factors. And if you have, if you have had a bad experience from trying to scale up, well, welcome to trading. That's all right. You hear me say it every week or so. Rule number one: live to fight another day. And next week's podcast, TOGS 51, which, as he checks his notes, TOGS 51 is about lessons hurt, how to handle losses like a pro. So hopefully you'll join us. Hopefully you'll join us for that one, which kind of lead on from the last couple of sessions. So I suppose also just to add that what I try and do now is I try to create like some follow-up material for just with the bullet points from these podcasts, and I've tried to add in like a kind of a reflection sheet. So if you can't listen to the whole podcast, okay, you can check that in. You can do it. You can do a couple of little exercises to help you. I want you to be able to sort of get as much as you can from these particular conversations and sessions that we do. But I suppose it's just to remember that scaling up isn't necessarily a milestone. It's actually more of a mirror. Okay, it's more of a mirror that you're holding up to yourself, and that it reveals how well you've mastered risk, routine, self-awareness. Okay, your account is only going to grow sustainably when the trader has gone through the growth beforehand. Okay, so as Ian said right at the very start, okay, you spend your first 5-10 years acquiring skills, and then it's once you've acquired skills that you start to acquire scale. So I think that's a good point for us to end on. Any final comment or point, Ian? Yourself?
No, not at all. Not at all. I think that's everything covered.
Boom, grand. Excellent, excellent. All right. Well, listen, ladies and gentlemen, thanks very much for making wake your way to the end. As I said, hopefully we'll see you on TOGS 51. Okay, next week on Losses Hurt, how to handle them like. And as I said, I will. This will go out as always during this week, and then, as I said, there's a little bit of a follow-up material that you can access on kind of like either I've got a school page or a Discord page and stuff. You can handle it if you want to take a quick look at the bullet points from the session. So, as always, thanks again. We wish you the very best of success in your trading endeavors for the next week, ladies and gentlemen. Hope you have a fabulous week, and we'll look forward to speaking to you soon. Trade well, everybody. Cheers.